Wouldn't you love being able to travel the world without the constraints of a paycheck or be paid monthly from holding shares of a company? Well, me too. And in this video, we're actually only going to talk about one or two of those things. And sorry to get you excited, but we won't be talking about traveling the world. In this video today, we're actually going to be diving right into my portfolio and analyzing my holdings. So I hope you'll all join me on my journey to financial freedom. Hello everyone and welcome back to my channel. For those of you who don't know me, my name is Tyler Rice. I'm a business and finance student and I post financial content weekly. So as always, before we begin, I'm not a financial advisor, simply a random guy on YouTube sharing my thoughts and opinions regarding finance. Always do your own due diligence whenever you're investing or working with your finances. Today I'm actually pretty excited since we'll be diving into my investment portfolio. I've had this account for a few months now. And I was flirting with investing before, however, I never really funded my account. But now that I've funded my account and I'm getting the ball rolling, I'm pretty immersed into the financial space now. So I consider myself a dividend investor, which means companies pay me monthly or quarterly for owning one or more shares of their company. Now, I don't want to take too much time up before diving into my portfolio. But before we begin, these are companies that I pick and that I believe in. So as always, do your own due diligence, like I said before. Just because, I have a different risk management than maybe you have, or I have a different goal in mind than you have. However, I know the overall goal is to grow our money and invest. Nevertheless, if you want the same opportunity, as always, you can click on my referral link in the description or in the comment section below so we can get our free stocks. Also, stay throughout the video because I'm going to go through stock by stock and how many holdings I have of each. Okay, so let's break it down by sector. Now, 37.62% of my portfolio is held in the financial sector. And as you can tell, that's where the majority of my holdings are. And then 21.07% of my portfolio is held in the servicing sector, while 14.96% is held in utilities. Consumer goods holds around 13.25%. And then my two lowest are basic materials and then unallocated or uncategorized stocks, which hold about 5.88% and 7.23% respectively. So I only have 56.33% of large value ETFs, and the remaining 43.67% is held in real estate. Now, as an investor in general and a dividend investor, it's important to pay attention to your risk and your dividend yield. So my average dividend yield is 4.23%, and the way I actually found this information, I use Nasdaq.com, and I actually upload my portfolio into their smart portfolio just to give me a, I guess, more intricate and more in-depth breakdown of my portfolio. My portfolio isn't very much volatile, and you'll see that later in the video. I'm actually up overall, which is kind of surprising. The whole crisis going on, and whether the stocks fall or whether the prices fall, I know the holdings I have will weather this storm. As you can see, I've changed the scenery up a little bit. I moved to a different room of the house. I'd like to apologize ahead of time. You may hear the clicking of my trackpad. So as you can see, I'm actually up 6.25%, which is $172, which doesn't make much sense. With the whole crisis going on, unemployment's rising each day. More and more people are getting sick each day. Unfortunately, more people are passing away because of this. And then we're just living in limbo. But the stock market keeps going up, so which is, I know, can be quite confusing. First up, we have Stag Industrial, which is sitting at $25.81 currently. So my average cost is $25.61, and I own 8 shares of it. So my total equity is $206.48. So my total return is just over $1.50, as you can see. Stag is a company that actually pays a dividend monthly, which is pretty nice. So as long as they have their dividend, I'm getting paid each month simply for owning one, and I guess in this case, all 8 of my shares. So next up, we have Virgin Galactic Holdings. So this is currently sitting at $20.07, and then my average cost is actually $17.35, and I own 12 shares of this. So my total return is $32.60, and then my total equity is $240.81. Now, this isn't a dividend-paying stock. However, I believe this company is going to grow over time. And I actually owned this stock when I got a free stock when I first opened up, and I sold it because I didn't do my research and didn't do my due diligence. I didn't know much about the company. And then after doing some research and hearing a lot about it, I was like, okay, this might be a company worth investing in. And as you can see, now I own 12 shares of it. So now we're going to look into LTC Properties. This is sitting at $35.28. So my average cost is $34.03, and I only own 3 shares of this. And then my total return is $3.76, which is 3.68%. And then my total equity for LTC Properties is $105.84. So the next stock is Apple Hospitality REIT, which is sitting at $9.15. My average cost for this is $8.35, and I own 10 shares of it. So my total return is $8.02, which is 9.61%. And then my total equity is $91.50. Now this is another company that pays a monthly dividend, which is pretty nice. So for owning these 10 shares, I get paid a monthly dividend. So next up we have Realty Income, which is a stock that many of us know about, those who are already investing, ticker symbol O. So it's sitting at $54.86. And then the average cost for me is $50.61. And I only own 7 shares. So my total equity is $384.02. So my total return from Realty Income is $29.78, which is 8.41%, which is pretty cool. And this company actually pays a monthly dividend as well. And then this is actually one of the companies which is high on my list. So I'll be, as the price goes lower, I'll be buying more and more of this stock aggressively. So next up we have Disney. Everyone knows Disney. This is currently sitting at $109.59. My average cost is $100.15, and I own 5 shares. So my total equity for Disney is $547.95, and then my total return is $47.20, which is just under 10% return. So Disney's actually been faced with some turmoil recently, and as this stock goes lower and lower, I'll definitely be buying. This is another stock I'll be buying more aggressively. But however, my price point, I want to get it in the low 90s, low to mid 90s, or mid to low 90s, I should say. And then, that's when I'll be buying more and more shares. So next up, we have another favorite stock of mine, which is ExxonMobil. It's currently sitting at $46.48. Okay, so then my average cost is $38.86. And then my equity is $371.84. Now, I know a lot of you may be skeptical because of what's going on with oil. However, this company's been working for me, and regardless of what's going on, I'm definitely going to hold on to this. And as the price maybe, will most likely go lower, I'll definitely be buying aggressively as well. Then my total return for this is $60.98, which is almost a 20% return, which is pretty cool. This is also another dividend-paying stock. So it seems like my favorite stocks are just coming in order. So next up, we have Coca-Cola, which is currently sitting at $46.16. Now, my average cost is actually higher than that, which is $48.82. So I will be at a loss. I own 7 shares of this. My total return is actually negative $18.62, which is a negative 5.45%. So my total equity is $323.12. Now, this is a company that I believe in, and I'm not going to sell at all. So as the price, goes lower and lower, I'm going to keep averaging down and, lowering my average cost. And this is also a dividend-paying stock investment, which is pretty cool. Some of you who are already in the investment space may judge me a little bit for this, but I am holding on some shares of gold, just as a safety net. So next up is Barrick Gold. So my average cost is $23.51, while its current price is sitting at $27.47. I own 5 shares of this. And then my total return is $19.79, which is just under 17% return, which is pretty cool as well. And surprisingly, this actually pays a dividend as well. So, I can't complain about that. So this next stock, those of you who are already investing may know a lot about. It's AT&T, ticker symbol T. So AT&T is currently sitting at $29.76. And then my average cost is actually a little higher than that, which is $30.91. And because of that, I only own a couple shares. I'm waiting for that price to drop a little more just so I can, aggressively buy. And then my total return is a negative $2.30, which is a negative 3.72%. And then my total equity is $59.52. And of course, this is a dividend paying stock. The next stock is called Inseego. This is actually a electronic and telecommunication stock. It doesn't pay me any dividends. However, this is a company, that since 5G is around now, and 5G will for sure take off, this is a company that, is in this space. And then as 5G grows, it'll also grow as well. So the current cost of it is $11.17. And then my average cost at the time is $9.68. And then I own 3 shares of this. And then my total return is $4.47, which is 15.39%. My equity is $33.51. So next up is a MJ stock, which is called Organigram. Now, don't get me wrong. I'm not an avid user of the products of Organigram. However, that's to each his own. Now, Organigram's products are legal in some places, and then in other places not. So if you catch my drift, you understand. If not, go search up what an MJ stock is. So currently, MJ stock is or not MJ stock, but Organigram is sitting at $1.47. Now, my average cost is way higher than that, which is $2.30. And then I own 35 shares of this. So my total return is a whopping negative $29.14, which is a negative 36.16%. So my equity is $51.45, which is terrible all around. But I'm not gonna sell this. There's hope for MJ stocks. So we'll see, what this holds. Now we're gonna get into another MJ stock, which at one point was the second coming of all MJ stocks. It was Aurora Cannabis. It was priced low, and I know a lot of us were in early on it. So Aurora Cannabis, ticker symbol ACB, has been doing terribly, and this is another stock I won't sell. However, I'll just hold on and I guess hope for the future. So ACB is currently sitting at 68 cents, and then my average cost is way higher than that. It's $1.27, and I own 40 shares of this. My total return is a negative $23.70, and then that is a negative 46.57%, nearly half of what I owned in the first place. So then my total equity is $27.20. So in this case, owning 40 shares, but my equity is only $27. I'm honestly okay with losing $30. Like I said before, we do invest differently. So if I lose this $30, that's okay. But then if that $30 turns into something greater, then the stock worked. If not, that's a part of the game. So these last two are actually the ETFs I was speaking about before. So first up, we have Vanguard US REIT Fund. This is currently sitting at $74.99. So my average cost is almost equal to that. It's $74.18. I only own 2 shares of this. However, I will put money in this over time, slowly, not as aggressively as the other stocks. But if the stocks do fall, I'll definitely go aggressive on this. So the total return for this is $1.62, which is only 1.09% return. And then my total equity is $149.98. So lastly, we have PowerShares S&P 500 high dividend, low volatility ETF. So this is the second and last ETF that I own. It's currently sitting at $32.31. My average cost is $32.28, and I own 6 shares of this. So my total return is 18 cents even, which is absolutely wonderful. And then that percentage is 0.09%. So my equity is $193.86. This also pays a dividend just like the Vanguard REIT Fund. So for owning these stocks, I will be paid monthly and quarterly. Well, now you all know everything about me. What a shame, right? No, but on a serious note, whenever you're investing, make sure you're always doing your own research and due diligence. Don't pick a stock or buy a stock simply because me, a random guy on YouTube, picks certain companies. Now, I truly believe in my strategy, and I want you all to do what works for you. I'll be adding to my portfolio on a consistent basis. My goal is at least $500 a month, to keep my portfolio growing consistently. Because of this current crisis, stocks are on sale, so pay close attention to companies you may potentially want to buy. So as time goes on, I'll be averaging down for some of the stocks that I'm at a loss for, and also I'll be investing more aggressively. Now, if not any other time, might be the best time for investments. Stay tuned for my road to 30K. Now, it will be a long one, but I'm sure it'll be filled with a lot of excitement. And as always, I would like to leave you all with a quote. And this one, once again, from the famous Warren Buffett. Be fearful when others are greedy, and be greedy when others are fearful. I hope I was able to provide you all with some value today. If you liked today's video, please comment, like, and subscribe. It really helps on my channel. And as always, be dedicated and stay frugal. Thank you.